Hey guys, how's it going? InvestQ here. I got a question. Have you guys ever wondered what it felt like to be in the right place at the right time when it comes to investing or trading in the stock market? Especially when most people, what typically goes on with them is they feel as if they got in the wrong place at the wrong time, regardless of what time frame they trade or invest in. Well, I'm going to show you exactly how I was able to get an $8,000 profit with a total of walking away with $12,728 when it comes to D-Wave Quantum QBTS in May 22 of 2025. And I'm going to also show you and discuss exactly ways that I'm going to apply some of the steps and the things that I did to help me continue this growth for future years to come with my portfolio, guys. So I just want to talk about exactly what was my initial attraction to D-Wave in the first place, because I don't want to tell you necessarily the strategies until I first tell you exactly why it is I wanted to buy into the stock in the first place. First off, I'm a big believer when it comes to just being first. And what I noticed is that when it comes to D-Wave Quantum Computing, they were the first actual commercial quantum computing company out there. So I just like the fact that they had more skin in the game and they also had more time and more experience. So just hearing that kind of made me intrigued in the first place. On top of that, I liked the people that they had in the leadership positions in the board of directors. Sorry guys, this popped up on my computer. One second. So I just liked overall exactly how it was that the experience that they were bringing when it came to what they could bring to the table to help grow the company. For example, you got Stephen West, who is the chair of the board. He had 30 plus years experience when it comes to information technology and strategic management. You got Dr. Alan Barrett. Him specifically, he's been CEO since the year of 2020, and he has previous experience with IBM, Cisco, and Sun Microsystems. When it comes to another member, you got John Dillon, who's an independent director, over 30 years of experience with technology, leadership, networking, cybersecurity, and enterprise systems, things of that nature. And the list keeps going on and on and on in regards to the board of directors, people they have in management, and supervisor positions that are very competent to be able to help the company grow. Now, even though I first believe in market usage and financials in my fundamental analysis, I understand, especially nowadays, that the news itself and behavioral investing is a thing. It's not just about the financials, the fundamentals. It's also about how the institutions and all the other investors are interpreting the news and the financials in general. And I do personally like the charisma and the approach that Alan Barrett's, with the news-heavy approach and always putting his face out there and trying to put the word out about D-Wave. I always liked his approach when it came to that when I first started investing in the company. When I first looked at this company, I saw how many big institutions were investors and the types of clients they had in the first place. So, for example, customers that they had goes down as like the people that they had. You got people like MasterCard, Pattison Food Group, Lockheed Martin was a customer. You got Goldman Sachs Asset Management. They were institutional investors. So at the time when I first invested, it made me think, okay, so there is a little bit more of alignment in regards to things like stacked up in the place as to why it is I personally would be. And again, you shouldn't invest in what other people tell you to. This was what I personally decided to take the risk and get invested into D-Wave Quantum. Now, to be fair, at the time of when I did first invest, the financials were decently shaky. However, the key points that I pointed above, I was still comfortable putting in some money. It wasn't all of my capital. I initially put in a small amount. I started off with a few hundred to $2,000, and then as time went on, I started to add to my position, and it went up as much as like $4,000, give or take. Still not a huge chunk of my overall net worth, but still just enough to give the chance to have decent growth. And what I did, all the key points that I mentioned before in regards to their experience, the people that they have that were institutional investors and their customers, the people that they have as with the level of experience that they have in the board of directors, and just all the other data points that I mentioned before, I personally was okay with taking this investment because I do understand that, especially in the beginning phases, because relatively speaking, quantum computing is a very new thing, and I did have not just faith, but I did have a strong belief that this was going to work out. You don't want to be biased towards a company because you still want to have red flags you look out for, and you want to take into consideration the risk factors. But I understand, especially when it comes to new companies that are just still in the developing stages, typically the financials probably aren't going to be the best when you start off because, again, they're just starting off and they have R&D and a bunch of other expenses that they have to take care of in the beginning stages. Now, I also, one other thing that I did like, it kind of ties into what I said about Alan Barrett. I like the company's approach that they took when it comes to hosting many web seminars and just overall continuing to put their face out there, put the name of the company out there, talk to investors, talk to people interested in the company, people interested in investing. They just kept getting the word out, and they kept just opening their mouth, telling everybody about D-Wave, why they should invest, and giving the positive news. Now, when I decided to sell off, it was after the Q3 earnings. If any of you guys were around at that time, again, the stock prior to them, because I first bought, as you can see here, my first investment was all the way in February 24th. It actually was my first ever investment. It was a very small investment, just $50 is what I started off when I was just getting my feet wet. That's the first investment I ever made into QBTS and into any investment period. So when it came all the way down to May 22nd, when I first invested, it was in the range of about $4 to $7. And there was a webinar that happened about a few weeks prior to May 22nd when I sold off, and it did shoot up to $10, and then it shot back down, and it stayed in the $4 to $7 range. But then all of a sudden, due to a big client that they had, where it really gave a bump up in revenue, the news it's turned into a very positive bullish catalyst and shot it all the way to $20. Obviously now it's gone higher to like almost $50 now, but at the time that was the case. And I personally decided to sell off my entire position, not because I didn't have faith in the company to continue growing, because obviously it still has been growing. But my personal reason was because I wanted to reallocate my cash into other companies that I also thought was interested and were at better prices for me. And also just I thought that there was better opportunities if I sold everything at that given moment. So that was my personal reason for doing it. Again, from here on out, what I'm most likely going to do, because I still do think it was a mistake to fully sell off, regardless in any company, once you hit your initial target, whatever the target could be, you always got to leave runners in place. That's a day trading type of mentality, but you should also do that with long-term investing too, because again, if you truly believe that a company is going to grow in the long term, you don't want to fully sell out of a position. If that's a company that you truly believe in is going to continue to keep growing years after years. But I just did this because it was just me starting off, and also I did find that there was better opportunities available to put my capital into different companies. Now, I also want to talk to you guys about, let me show you this. I want to show you how I personally was able to stay in QBTS when we were going through that rough period, because I want to show you exactly what it was like. So here, I'm going to show you what the chart looked like on QBTS initially, and then I'm going to show you what it looked like on my portfolio. So sorry guys, give it 1 second. It's acting a little bit slow, just a little bit slow. Right, let's see here. Okay, so let's go to 1 year. Now, again, my first investment was February 24th, right? And then this isn't going to be fully accurate, but February 24th was all the way here. And then I was eating crap for a little bit, and then we had a big jump up right here, right? This was in the March 17th range. At that point, I had like a 60% return, and I had about $2,000 up, and I wasn't $2,000 up, but that's how much money I invested into, roughly $2,000. And then we shot back all the way down because I did make a little bit of a mistake, and technically it wasn't a mistake because again I still had belief the company was going to keep going, but I did buy a little bit closer to the highs around the $10 range, and then that did kind of raise my average cost. So then at this point when I was here, instead of being break even again, I was down roughly $1,000 all the way until we finally got to May 22nd at the tippity high of that period of the news catalyst. And again, I did not participate in these big moves, but I did sell off here at this big bump, and I did get that big payout that you guys saw. You saw in the video with the $12,000 plus. And I'm going to show you what that looked like on my actual portfolio. So again, like I said, we had that big bump up right there. And again, I was up $2,000, 29%. At the time, that was closer to like 60%. And then I was eating shit for all the way from May 17th all the way to, let's see here, to May 6th. So almost 2 whole months of that. Now, I'm going to explain to you exactly why from a psychological perspective I'm okay with situations like that, even though some people wouldn't be. Is one, I do a very good job not avoiding panic selling. That's something I don't even think I have panic sold yet throughout this entire year. I continue to dollar cost average, but I also continue to build up my emergency fund and my savings, because when you do that, it helps avoid the psychological anxiety you get about losing money in the markets. Because if you still have money on hand and you're able to handle your day-to-day expenses, any emergencies, and overall, if the stocks go to zero, worst case, you always got to think about worst case scenario. If it goes to zero, worst case scenario, you still are not going to be living under a bridge. So that helps out with that aspect. And then another thing that I recommend that I think is underrated, and I don't really hear investors talking about, is filling your time with things that give you joy, meaning, and purpose and fulfillment. And personally for me, the past year, I have been focusing a little more on something that I love, which is boxing. I've been competing and took a few more fights. Again, that takes up all my energy. I still would passively check the news and my investments and stuff. But since I'm doing something that fulfills me, it's balancing me out, giving me joy. It's not leaving me in an anxious state all day, and I don't have the time to overanalyze the charts all the time. Again, that's going to be different for everyone, how they would approach it. But again, whatever works best for you, make sure that you guys do that, man. Make sure that you guys find something that fulfills you to help fill your time up. And another thing that's also underrated is you got to learn to control your breathing. I actually learned this in boxing, but it is something that is valuable for you, especially if you open up your portfolio. And people talk about emotional control and emotional discipline. When you learn to properly breathe with your diaphragm, inhaling through your nose, exhaling through your mouth, and you do that for a good 5 minutes, and you step away from the markets, I learned this from boxing day trading. This really helps you prevent you from making bad decisions and keeps your head more clear. So that is something that also is another tip you can use to help avoid panic selling. And lastly, just so that you guys understand, all of those tips that I gave you, when you put all of them together, you're not going to be perfect, and it's not going to be an end-all, be-all. It's not going to be like the magic holy grail. But you will notice a difference in progressing brick after brick with your psychology, your discipline, and your psychological discipline will help your portfolio go up because you're not panic selling and you're not doing the things that is holding you back when it comes to investing, day trading, swing trading, whatever time frame you trade or invest. So with that being said, guys, happy to be here. InvestQ out. See y'all in the next video.